Hello everyone and welcome to the KMTRADERS channel. So we are looking at the pound for this video due to obviously Brexit coming up this Friday. So I just want to look at some positions and just try a look at the situation that we've got at hand. As you know, I'm more of a technical analysis style of play. So we'll have a look at where the bull run is currently forming or if there's a bearish run through the market. So I'm just going to analyze the technicals of it with just GBP USD and Euro GBP. Not going to focus too much exactly regarding the fundamental side, just purely based on the factors. I believe that the news is much more of a delayed factor. It does help in some sense, but there is more of a technical side to it, which I do believe you can get into the market a lot earlier and kind of predict where the market is likely to head, as opposed to when the news actually does come out. So yeah, so we'll just go ahead and begin have a look at some chart work really. So this might be a little bit confusing for some, so I'll just try slow it down as much as I can, and my thought process is going through it. So I'm currently on the monthly time frame. Now what I'm trying to assess here is structure really. Now this is really far back, we're talking 1980s. So we want to try stay as relevant as we can. So anywhere from the 2000 obviously plus would be great. So I'm just going to focus my attention on this part here. So my main focus is essentially structure really, like where we are likely to head, and placing our momentum really and getting our overview direction and the bias really. So as we can see, we've got a structure low here, so I'll just pinpoint it, and then we got a former high, so around there. So essentially what this means is we came obviously to this point and we retraced all the way back up to obviously this point here, and essentially this was range bound, but because obviously this is a monthly time frame, each one of these candlesticks is a month, so therefore there is a lot of pips in between there, but that's not the what I want to focus on just as yet. So as we can see right here, we've got a wick action right down here, and now this is the new current low, and if you can just see how we've just came short of it here. So now I'm going to start putting in some trend lines, make it a bit more obvious to the eye, just to see roughly, you know, the bias of it and where the momentum is. So as we can see, we've had that structure broken out here, and now we're essentially retesting this level. As long as we don't break below this level, we should be fine, and this could continue to push us to the upside. So notice that I don't have any indicators right now. We'll put them in afterwards, but this is just basically for getting the bias, and then the indicators come afterwards. That's just depending on how you I guess trade your system, but we would add that in on a lower time frame. But as of now, we just want to look at the naked chart on a wider perspective. So as we can see here on the monthly, we are descending quite low to our previous low that we made on the 16th of October 16. So essentially we've literally just touched on the top of this level, so we exactly retested this low that we currently have. So if we now start to look at the weekly and again reassess everything again, so literally we're just repeating the same processes over and over again, right? So as we know that this here is the low, now we can start to draw in some more trend lines. Just being very rough here, but still you get the idea that momentum took to the upside, then we broke. Nice. double top pattern formation there. Nothing too complex, right? Now I took you down to the weekly just purely based off this here. Now, if you watch my daily analysis videos quite regularly, um, you will know how we play the demand zone game. It works on not just only on the 4-hour time frame, it also works on a larger time frame as well, such as the weekly and the monthly. So if we play it off the weekly time frame, what we essentially want to see is a wick rejection to the downside or test of this zone, with followed by some sort of rejection and then followed by the bullish momentum to the upside. So if you can see here, we had that all in one candle here. So we had the bullish momentum to the upside followed by the testing of this area, essentially came in, came back down, and then if we go on a lower time frame, even lower than, so a daily, you'll see it much clearer. Boom, you see it right here. If we just draw this wick zone in here and do a different color, you can see quite clearly here that we have the tapping of a new zone here, the wick rejection, and then the huge bullish momentum to the upside. So you can start to see that we had some clear bullish pressure from this point onwards, right? So if we just take it back to the weekly, we can see that the current momentum now on the weekly is more or less towards the upside. So I'm just going to fill in another trend line, and we can see that we've got this break and it's almost parallel towards our weekly level here. So now I'm going to obviously move to the daily, and now I'm going to start putting in some color into the charts. So I'll start off by having a look at the actual, the trend and how we can start to connect. So for those that don't actually know how to connect and draw trend lines, essentially it's just connecting any two dots, any 2 points, and that forms a trend line. There's no real complication towards it. I use some people use body to body, I use wick to wick. So wick to wick is essentially the stick of the bottom, and the body is the rectangle right there. So there's no confusion there of how I'm drawing the trend line. But as you can see on the daily time frame, if we then again mark our lows and highs, so this is our so we made a high, a low, made another high, made a low, a higher low, sorry, and as you can see, we are expected to come up towards this point really. So more or less right here. So you just seen me just drawing this in. Makes perfect sense that we broke this high here, and we made a new high before we made a lower low. Then we made a newer high, which is essentially here, and then we came back down to form a new higher low, and then essentially we've now range bound ever since there. So if I now start to draw in some form of pattern, so if you do study some patterns, this is typically known as a wedge pattern, where price just really bounces in between these lines, and it almost just forms like a triangle in a way. So what we want to see right here is in a breakout to either the upside or the downside. So I'm focusing my bias towards the upside purely based on the higher time frames, but it all depends on how other people see the market as well, because the trading is not really just about what your analysis is. You got to see it from other people's perspective as well. So if other people can see your analysis working, then hopefully majority of the people will have the same sort of idea and thought process going off in their head, and therefore you want to be trading with a lot of the people as opposed to just trading against people, because obviously it only takes one person to out trade your own trade. if that makes sense. So if you've, say for example, you've got a short from here, it only takes one person to buy, and essentially you've been taken out of the market more or less. And obviously you just got to risk your bet. So part of the wedge pattern, the underlying concepts of it is the wedge pattern almost signifies a range pattern. So when a range pattern occurs, it essentially means that the market isn't deciding exactly if we want to go up or down, and that's purely based on other factors such as fundamentals that we talked about. I don't really go into it too much. I just purely focus more on the technical side, but I didn't need to know, if you know what I mean. I didn't need to know the fundamentals to see that this pattern was occurring. But when you match up both of the fundamentals together, it makes much more obvious sense that this is essentially the Brexit indecision coming into play. So now that we are scheduled to leave on the 31st, there is a lot more buying pressure towards upside if we just focus on the lows and the highs that we've made. So if we now scope into the 4-hour time frame, we can see just how much buying pressure there is right now, coming off of the bottom of our wedge. So my expectation is really just simple, really. I do expect this to come back up, test some form of high, and eventually come to test our high that we've created here. So I'm looking at 1.3513. So regardless of your own strategy and regardless of your own sort of like how you take the market on and how you look at GBP/USD, if it does break out at this point and we are bullish, you've got all this point to get into this move, because once it goes past this level here, we could be expecting to make further, like even more higher highs, and eventually could come for a retest. So essentially, we break up towards here, we do something like that, and then boom, straight to the upside. So that, you know, if you do miss all of this move here for whatever reason, and you just can't simply get in, there's always opportunities to get in. I wouldn't put any, you know, form of, say for example you got in midway and you weren't too sure, like I'm not expecting people to do something like this. Like, be careful of your risk management unless you are willing to adjust your lot sizes for this trade, because this is risking a 400 pips just for this range point here. You want to be very careful with your own risk management and essentially looking like that, really. So I was going to actually look at Euro GBP, but this video is quite long right now. So just basically, I'll just kind of describe what the Euro GBP is. I'll just quickly show you. Euro GBP is obviously just that inverse action, really. So if I just quickly show you the momentum side, we'll just quickly draw some things in. We can see that we've got the high here that we've formed, and we've got that breakout. So essentially what this is saying is that the euro is actually weakening against the pound. So the pound is obviously going to strengthen. So if we know that as our bias, we can start to dictate the momentum and the move towards regarding where we are likely to head. So if we just draw this in, so right now we do have some form of buying pressure right here, as we've said, the breakout, but this could be a fake out. So essentially we could be seeing this occur on a lower time frame like that, and this could potentially continuate and test this low. So if the pound does strengthen, I will be looking for Euro GBP to obviously come back down and test this level. This is roughly at 0.82746. So essentially it's just this low here. And essentially when this whole process comes into play, this is my my outlook of what I think the pound will do. The pound will get stronger, the euro will get just a bit weaker against the pound, and we'll see how it plays out, but that's just my personal perception over it. And obviously it gives you a look at exactly how I quickly make a bias on on the high time frames, and I think you should adopt it into your own trading style. Have a look and see how it works. It may be a turning point in your trading career. No idea, but hopefully this video helped you quite a lot. Now, if you are interested in following any of our other stuff, check out our daily analysis videos. They help you follow our trading style. We put out a trading method, so we review it weekly analysis wise and then a daily basis as well. And we essentially teach you a very simple trading method. So if you haven't got one, definitely check out our one. And if it works for yourself, obviously adapt it to your liking, make some tweaks around it, and do your own thing really with it. Because like I said, trading is all about making your own style of trading. There's no right and there's no wrong holy grail of a trading style. So yeah, so that'll be all for this video. It's just my perception of Brexit, and the technical side as opposed to the fundamental side. I don't really like to do that, but yeah, that's all I'm going to cover for this video. And just quickly, if you haven't done so already, make sure you subscribe to the YouTube channel, and that'd be great. So thank you very much for listening, and I'll see you in the next one.